impact strategist and business coach. I run a small social enterprise called Share Impact, which is all about helping social entrepreneurs measure and communicate their impact better. And it was actually listening to Erinch's similar presentation to what he's going to give today and what we're going to talk about today at another conference that really inspired me to set up this summit. So thank you very much, Erinch, for this. Really, because I thought, you know, some of us are very lucky to be able to attend conferences and hear great people talk about really interesting, helpful, you know, academic stuff, but also practical things. Many of us can't always attend those conferences and events, and I think an online summit is a really great way for us actually to share some of those perspectives and that knowledge and expertise in a different way, so we don't have to, you know, spend a particular time or costs in terms of actually attending conferences and summits. I think online summits are now a great way for us to actually connect internationally, hear from people that we wouldn't otherwise get to connect with or hear from. So hopefully with this summit we'll be able to achieve that a little bit. It's great to see that we've already got over 150 people signed up so far. I'm pretty sure that's going to increase as the week goes on, as all of those participants start listening and watching and sharing it with their networks as well. I think we're pretty much at time, so let's get started. So thank you to everybody who's joining us live. It's fantastic to have so many of you here on live. We started this morning with our very first webinar with Rian, so you can definitely, if you're signed up, you're watching this live, so you will get a recording of that later, also a recording of this one now, and then also you'll get links to the recordings for the next 2 weeks as well, if you continue to stay signed up. Really grateful that you signed up and are interested in this summit and what I've created, and I really look forward to connecting with you and really encourage you to continue the conversations that we have here, both on LinkedIn, Facebook and Twitter. Also on Instagram. I'm less active on Instagram, but if you're on Instagram and that's where you want to have the conversation, I'm more than happy to do that. And yeah, now or watching on the replay to hear what inspired you, what was interesting for you to join the summit, which particular webinars have been most useful or interesting or challenging potentially to you, because that's always useful when we kind of come to evaluate it and think about whether we're going to do another one next year, which I'm already thinking about, so that's always good fun. But let's get straight into it. So I would like to welcome Erinch, who's the CEO of the World Fair Trade Organization. So welcome. Thank you. Good to be here, Kat. Oh, it's fantastic to have you. And like I said at the very beginning, which people might have missed, it was really listening to you and a couple of other people at a particular conference that I attended here in the UK earlier this year that really made me think these conversations need to happen on a much wider platform. We need to, and I know you already do this anyway, but we often only talk to people within the social enterprise sector, and I was really keen to have these conversations in a much broader way. And I can certainly learn more about how we do that and how we get these summits to a much wider audience. But we thought we'd start, and I really thank you for actually taking the time to contribute to this summit. So thank you. As we get started, Erinch, it'd be really great if you could give us a very quick introduction to yourself, your background, and also the World Fair Trade Organization, just for those people who aren't familiar with it, and then we'll get into some of the presentation and the questions.
Sure, thank you, Kat. So I'm Erinch Sahan. I have a strange name and an even weirder accent. That's because I'm Turkish by heritage. I was born there, but I grew up in Australia, so hence the combination of a Turkish name and an Australian accent. With a bit of a British twang, I hear, because I've lived there for 7 years as well. So personally, that's my background. I worked a lot in business, in government, in the NGO sector, and now in the World Fair Trade Organization. A lot of what you'll hear from me today it draws from a lot of my work at Oxfam, where I was for 7 years, looking at the intersection of business and inequality as my main priority. And Oxfam was an organization, particularly during that time, that was focused significantly on the growing inequality crisis and the causes and the drivers of that. So a lot of my insights come from my 7 years working on that issue from a more technical lens there. I've since joined the World Fair Trade Organization as their new chief executive. That was earlier this year. The World Fair Trade Organization is essentially the social enterprise wing of the fair trade movement. It was established 30 years ago by the pioneers of the fair trade movement, before the certification schemes and the commodity mechanisms that have developed were around. And essentially, fair trade, when it first started, was a social enterprise idea of saying, can we have businesses up and down global supply chains that are structured to prioritize the interests of producers, of workers, of farmers, of artisans in poor countries, and that still continues. So we represent more than 400 members in more than 75 countries, who are the majority of which are social enterprises that are doing business and structured to prioritize the interests of workers, farmers, artisans. So I'll draw a little bit from that right at the end with a few examples, but should I jump straight into the talk, Kat?
That would be brilliant, and then we'll get to the questions afterwards. That would be fantastic.
Sure. So I'm going to talk about this rising inequality crisis and really pose the question of whether social enterprises are the solution. In many ways, at a very micro level, this probably seems like an obvious statement to make, but essentially what I'm going to try to present is a framing of this as through a more macro lens as well, that the ideas of social enterprise as an alternative model of business, as a mission-led model of business, as a commercially viable, market-oriented, yet able to prioritize a social mission model of business, how that relates to the real sort of heart and DNA of the inequality crisis globally. So that's going to be the thing that sort of underpins the analysis that I'll provide here. But firstly, if we can move into the fact that, oh, sorry, I was jumped ahead a little bit, into inequality as an issue. So, I mean, if you need any convincing that inequality is growing and inequality is bad, then this is my main slide that hopefully will convince you that it is a bad thing to have this growing extreme inequality, and it is also something that affects many aspects of society and our planet. Loads of analysis now showing that a smaller and smaller proportion of billionaires control more and more of the world's wealth, and that sort of extreme growth and extreme inequality, which started really a couple of decades ago, but has really gone to more exacerbated levels today, is only getting worse. And that's getting worse and is impacting all of us, not because, you know, equality is a general idea that we all like. That's not really the main reason. It's because increased inequality leads to more crime and more corruption, less faith in political institutions, less faith in health institutions and educational institutions. It leads to shorter lives for rich and for poor when you get to very extreme levels of inequality. It gets to political and economic instability. And it is linked fairly directly to some of the rising political instability we're seeing in countries rich and poor around the world. And lastly, and maybe most critically from the lens of my work currently and previously, is that inequality is a major barrier to ending global poverty. According to the World Bank statistics, IMF and others have also conceded this, that we would have gotten hundreds of millions of people out of poverty if we hadn't seen this growth of inequality during the period over the last couple of decades. So we would see fewer people trapped in poverty if we had a global economy that didn't create the kind of inequalities that we are seeing. So inequality is bad and it's getting worse is really the summary of that slide. This is something that my former employer Oxfam brought out last year, which is that we're getting to a point now where a very small number of people control a vast amount of wealth in the global economy. And we've been tracking this for years, and last year it got to a point where 8 people had the same wealth as 3.6 billion people. So half of the world, if you line up the global population on a line, the poorest half of the world had the same wealth as just 8 people on the other end of that spectrum. And that sort of growth to those sorts of huge imbalances of power and wealth were having ripple effects in many unforeseen ways, as lots of other research is showing us. And one of the key ways it really is manifesting itself is this idea that that working people who are who essentially rely on their labor for their income rather than their investment for their income. So people who are laboring in order to earn their income, their wages aren't rising alongside their productivity. And this is something that's entered political narratives as well across the world, that somehow people, despite becoming more productive, aren't seeing the benefits of that increased productivity. And that sort of manifests itself in global supply chains as well. We are seeing less and less proportion of the value of products and services in areas that are more labor intensive. So for instance, if we break down a chocolate bar, in the 1980s, the cocoa farmer that is behind that, the chocolate bar, or the cocoa within that chocolate bar, would have received about 16% of the value of that chocolate bar. Today, it's down to 6%. We're seeing similar trends across the world in agricultural commodities. We're seeing it across the world, even in European agriculture, where you'll see on the left of that slide, in 1995, 31% of the value of the food system would go to farmers, where the highest degree of people were working. That's now down to 21%. So less and less part of the pie is going to the places where it is being distributed back into people who are laboring and working. And that's a bit of a systemic problem that is having ripple effects in many ways. And inequality, that rise in inequality is a problem for multiple sustainable development goals. So if we look at the global goals that very across the spectrum, across political spectrums, everybody agrees with, it's a good thing that that we need to have these sorts of models, or these goals achieved. We are seeing that rising inequality is a major barrier across the board. So whether it's hunger, poverty, gender inequality, or other aspects of the of meeting social and environmental goals, it means that there's less value to go around. That means that there isn't the investment into health and education that's going to lead to these outcomes being reached. So it underpins so many of the sustainable development goals. And if there is less and less to be invested into these, and less value going to a broader set of people to get to these living standards, then that's going to be a problem overall. Also, there's something innately accepted by most people, that this rising inequality is not only visible, but is also a significant problem. Over 3/4 of the people that have been surveyed in one particular study we looked at were thinking that the gap between rich and poor in their country is too large. And this cuts across political and ideological divides, that when they look at people, they think that there's something broken with the system that is causing this level of disparity. 2/3 of people think that this is an urgent crisis. And most were, the fact that they were seeing this as a problem, and when they were asked, how big of a problem do you think, how big do you think this gap is? They were vastly underestimating the gap. Like, in reality, the gap was much bigger than they thought it was. And already at that underestimated level, they thought it was something that needed to be addressed. So it's not going away as an issue, because people notice it, people see it, and they think that something needs to be done about growing economic inequality. So then let's get to the heart of the matter. A group of economists every year put out a report called the World Inequality Report. The bit that really captured my attention this year was that they said economic inequality is largely driven by unequal ownership of capital. So assets that people own, because the global economy is increasingly rewarding returns to assets and decreasing in its reward to return on labor, then this is a major problem, that the bit of the economy that is capturing a bigger chunk of the spoils of the global economy is the bit that's most unequally divided. The way that capital is divided between individuals on this planet is a significant problem. And that brings us back to business. So how is business geared to address this? If inequality is a major crisis that impacts all of us, and we know that we need to reverse this trend that people who have the capital are getting higher and higher returns vis-a-vis people who don't have capital to invest, then how does the business DNA of business need to be addressed? Well, the analysis that I would like to put forward is that the companies that we are looking at around the world, the mainstream businesses that decide on how the spoils of the economy are distributed and shared, are geared to prioritize returns to shareholders. So they are geared to increasingly focus on returning value to investors, to shareholders, to people who have capital to invest, some of whom will be workers through their pension funds in some countries. But that will be a vastly unequal distribution, because even in the US, where there are significant pension funds, the top 1%, the richest 1% own 40% of the shares. So if we keep distributing, and companies are geared to distribute based on the way the ownership of their shares is spread across the economy, we're just going to create more and more inequality. And that issue is getting worse, because in the 1970s, a company in the UK, for instance, would spend about 10% of their profits on returns to shareholders. Today, it's 70%. In the US, it's a similar sort of trend, where there's been an increasing focus on providing returns to shareholders as quickly as possible, as much as possible. Rates of reinvestment into the economy have gone down. So there's something very distinctly broken about mainstream shareholder capitalism, which has become obsessed with extracting value for shareholders, returning value for shareholders, and focused on that in every decision it's making in every way. But then that sort of begs the question of, if business shares economic spoils in proportion to ownership of capital, then haven't we hardwired it to grow inequality? So if you already have high amounts of wealth, then the dividend check that you get will always be bigger than people who have very small amounts of wealth through a pension fund. And over time, your wealth will grow faster and faster and faster compared to everyone else, and we will see a higher amount of inequality over time, because that's the focus of the economy. And that's where I think that social enterprise comes in. So if we have a model in the mainstream economy that has become obsessed with a singular goal of giving priority to shareholders, returns to shareholders at any cost in many sectors, then we need to see an alternative range of business models and structures arise that buck that trend, that take off that straitjacket of only caring about one singular goal and only caring about one singular stakeholder as their key one. And that's where I think social enterprise is being successful among a broad range of alternative movements, whether it's cooperatives, it's B Corps, it's fair trade enterprises, it's social businesses, all of which overlap with each other. Social solidarity economy enterprises, the social economy. In different parts of the world, we use different language, but essentially what we're saying is that these are businesses that have a social mission that is at the heart of their business, whilst also being commercially viable. They're not geared and engineered to extract value for shareholders constantly at an increasing rate. And that is the main contribution, I believe, that the social enterprise sector can make in redistributing the spoils of the global economy. So let me end by just providing 4 examples who are our members. So we have more than 330 social enterprises that are geared in the way I just described to pursue a social mission. And you can decide for yourself whether you believe some of these can be inspirations for alternative models of business generally. So on the left, we have in India a women worker-owned factory. So this is more than 300 women work in this factory, producing garments that are sold around the world in some big and some small chains. But all the profits are reinvested into the mission of this enterprise, which is to support the women. If there is any distribution of profit, it goes back to the workers. They end up driving the priorities. The board is dominated by the representatives of those women workers, and it behaves markedly different to a regular private enterprise or a listed company that would need to be extracting profits constantly for its owners. Secondly, on the right is El Puente. It's a business based in Germany, one of our older members. It's a fair trade enterprise, but it's owned jointly by 4 separate stakeholder groups. So one is its own workers, the workers who work in the import facility and the office. The second is its suppliers, so people who make the chocolate that they sell, or who make the clothing and jewelry they sell. They own a quarter of the business and have representatives on the board of El Puente. The third is the shops, so a big network of hundreds of fair trade shops across Germany, which are owned by local communities and run by local communities. And the fourth is the founders, the social entrepreneurs behind this particular business. And the way that that's set up is to distribute that value differently. On the right is our biggest member, Dr. Bronner's. It's over 100 million in turnover, but Dr. Bronner's is a business that's been set up to reinvest half of its profits back into its social mission. It's got a cap on the highest to lowest pay of 5-to-1, and its board is forced to pursue a social mission. It's also a benefit corporation based in California, so it's got legal documents that force it to focus on its social mission deliberately above profit extraction. The third is Cojolia, a member of ours in Guatemala, which exists as a not-for-profit that facilitates trade for local artisans. So every decision it's making, it's focused on its goal of creating opportunities and income for artisans that are producing all sorts of products that are sold around the world. And the last one on the left is Township Patterns in South Africa, one of the most inspiring businesses I've ever come across. It was set up in township, it was set up to support women's cooperatives in townships across South Africa, which are still thriving, exporting around the world, redistributing its profits back into those communities, and making decisions to prioritize livelihoods and empowerment of the women who own the cooperative network behind it. So all of that sort of adds up in our model into having nearly 1 million livelihoods, more than 74% of which are women, supported through businesses that are engineered and geared to have that social mission. And a very interesting observation is that when you set up a business to have the social mission as its priority, then it ends up doing all sorts of other things, like having generally far higher rates of representation of women in management as well. So across the board, in terms of the CEO positions, in terms of the board positions, senior executives, the majority of those roles are held by women. That's not a requirement of being in the World Fair Trade Organization. It's just an outcome that happens when you liberate a business to pursue a social mission alongside commercial viability. So I'll end there just by saying that social enterprises broaden what business can be. They give us an imagination that goes beyond profit maximization and beyond very narrow descriptions of financial incentives. But the question that I think it imposes on all of us to think about if we want to tackle the inequality crisis is that how can we inspire mainstream businesses to be transformed in a similar way, to take off that straitjacket of maximizing profits and extracting profits only for shareholders. Thank you.
Brilliant. Thank you so much, Erinch. I think that's, well, there's so much in there. We can now hopefully sort of start to kind of unpack and stuff. And I know it's difficult to condense presentations like this when you've got so much data and expertise to share with us. So thank you. I really appreciate you kind of keeping that as condensed as possible, but there's so much great stuff in there. I'm now going to attempt to try and ask some questions about that, but I'd also encourage the audience, if you've got questions, I think we've had one question that I will come to in a minute. If you've got other questions, then please either put them in the question box or in the chat box, and we'll try and come to those as well. So which question do I start on? I suppose just because it was at the very end of your presentation there, fresh in our minds, I'm really interested in this, women's leadership, gender, because what you're saying actually is that that's a natural outcome. It's a positive natural outcome that happens for these social enterprises. Have you got any insights in terms of research that's been done on why that happens, particularly when there's a positive social mission or a better structure in the business so that finances, the profit does go back to individuals, communities, etc. Why is it that we then find that more women are leading those organisations, or there's a better opportunity for women to go higher in the hierarchy?
I mean, it's really hard to summarize because the businesses that underpin these figures are spread across more than 70 countries. So the social dynamics in those communities look very different, and the story behind each enterprise with a woman CEO, women dominating boards, women in senior management will look slightly different. But the main thing I think that pulls it together is that if the mission of the enterprise is we exist here to maximize our social impact on this local community, and particularly the more marginalized aspects of this local community. And it just so happens that more than 74% of the livelihoods that depend on this business happen to be women. I think it opens the way for more open dialogue with those communities. It allows those businesses to say, right, this is our mission. We want those voices represented, and naturally women are more likely to step to the plate. Whereas I think a more aggressive shareholder-led model will naturally exclude some of those voices, and will say that a very narrow conception is what's required, and you'll get representatives who understand how the finance sector works, who understand how big sort of global finance works, and that's a sector that's dominated by men. Whereas if you say your focus is on people in the local community, well, that's a sector that's dominated by women. So that the people that step up from the two different stakeholder groups end up reflecting, I think, in some form, the gender of those stakeholder groups.
Yeah, which makes a lot of sense. And I can see then from that, which is really exciting for me, and I'm sure lots of people will join us on the summit, in terms of the ongoing benefits of investing in women, both as employees, but also leaders of those companies, because there's always a knock-on effect, like you said, within their families, but also local communities. And, just the natural empowerment that happens from just having employment and having purpose and having a community that you go to work with every day. But also the reality of then actually having income, to support your family, but also to invest in your local community as well. And I think the knock-on effects will be huge. Just from that. So I think, it's really exciting, and certainly seems just like a great reason why we should have more social enterprise, if nothing else. But I know there's so much more. So the next thing I wanted to ask about, which we also talked about this morning, and I think will be a consistent theme, although I'm going to try and approach it in different ways throughout each of the webinars, is around how we define social entrepreneurship. And what I find particularly interesting with you, Erinch, and just the World Fair Trade Organization generally, is you have so many different models, you're operating in so many different countries, and I welcome the fact that you don't just have one simple definition. One of the things from listening to your presentation previously and today has helped me refine my own very simplistic definition, but is purely around the fact that for me, social entrepreneurship is about how that profit is distributed. So whether it goes to individual shareholders, which is like what you're saying is one of the challenges and problems that we have globally, or whether it goes back into investing into that social and environmental mission, which inevitably usually has a direct impact on the employees and therefore the local communities in which it operates in, or is impacting through its activities. Would you agree with that, or do you have a different perspective from your global kind of view?
I mean, I actually, let me put up a different slide, which I didn't use here, but I was just this morning talking to one of our staff members about, which sort of breaks that down. We did a little bit of an analysis of our model and thought, what is it that gives these enterprises, these 330 enterprises, a social mission? And we really tried to break that down. And there's a little bit of a triangulation model that these enterprises get audited and peer reviewed on in our system. So they get checked on the human rights conditions in their own business and in their supply chain. They get checked on their trading practices. So are they paying prices that allow for living wages? Are they having long-term commitments? All the things that we know are conducive to human rights and social impact in their supply chain and in their own business. But then they also get checked on their mission and their structure. And I think that's where the social enterprise question comes in, of saying, well, what really gives it a social mission that allows it to prioritize a social mission? And I would say two things around that. Firstly, that there isn't a single particular marker, I think, that would define why they have a social mission, but they've all had different creative structural features that allow them to wriggle out of that straitjacket of saying, I exist only to maximize profit. And the minute that they wriggle out of that, then lots of other things are possible. I think profits are part of that. The second bit is really that that the different features can exist, coexist with each other, or elements of it might exist. So when we broke down the models, those 330 enterprises all had one of these four features. So they had usually either a board that was dominated by the workers or the farmers, or by mission-led organizations themselves, or they had a profit system. And that profit system meant that it was, they had to reinvest a proportion of their profits, or it stopped an extraction of profits, or it had to be distributed to the workers or farmers, or it went to some sort of a social mission in some form. Thirdly, they had a governing document or a legal form that forced them to prioritize their social mission. And fourthly, and these are all fourthly, the fourth option was they were owned by either a mission-led organization, or by the local community, or by farmers or workers or artisans. So I think those are four different structural features we found amongst our membership that gave it that liberty to pursue a social mission. And it's when the social mission doesn't align with the profit maximization mission that it really shows. Every company will have fantastic case studies of where it made more money by doing the right thing, and it was able to deliver more returns to shareholders by doing the right thing. That will always sometimes exist, but not all the time, and not always, and not every circuit. And it's where it doesn't exist that you really get a sense of, is this a social enterprise, and does it have those structural features that allow it to prioritize a social goal when it is pulling in a different direction than the maximizing returns to shareholders.
That's brilliant, and that's really, really helpful, I think, for everybody kind of understanding. And I always is the case, it's more complex, but I think the fact that you've got four very different elements there that can help organizations have, be social enterprises, have a clear social mission, is really, really helpful. I'm wondering whether
I will put it here. So these were the four that we were just talking about, that there's this triangulation of models of, you're looking at the conditions, the trading practices, and then the mission and structure. And then the mission breaks down into, you can see it in the board, or you can see it in the profit model, or you can see it in the governing documents, or you can see it in the ownership. But those four categories, those four features are all features you wouldn't see in a mainstream business. Every one of those four would normally be aligned. The board, the profit model, the governing documents, ownership will all be aligned to maximize extraction of profits, to maximize creation of profits, and then maximize extraction of profits for shareholders. And anytime you buck that trend, it gives you a bit of liberty and wiggle room to do other things along your social mission.
Brilliant. So coming back to that last question, then you're asking about how can we help the mainstream business world, I suppose, that more traditional for-profit model, think differently and move hopefully towards being more socially minded, have a social mission. I know we've got a speaker later this week who's actually changed their business. Recorder Group, Philip Orman's talking about how he's changed his business from that more traditional model to a social enterprise. And it'll be really interesting to see which aspects of this they've changed and why they've done that. But is it possible, or have you seen other examples of where businesses have made those decisions to, have more greater or 50% representation of their workers on the board, and change their governing documents or become owner-led? I mean, I know that there's certainly here in the UK we've got increasing examples of the owner-led model, particularly in communities for like local community assets like buildings, community centres, things like that are kind of community-led and community-owned. But have you seen examples of that where actually more, rather than just new startups or new social enterprises, like organisations transferring and becoming social enterprises from traditional business model?
Yeah, I mean, I think it's very difficult for publicly listed companies to change. I think financial markets do not take kindly to leaving money on the table and to not extracting as much. I mean, companies and boards can be punished heavily for trying to do some of these things. So I think it's very difficult, but we're seeing a lot of growth of worker ownership models, for instance, a lot of In the US, there's this huge trend where companies, family businesses, private enterprises that have been owned by families, where the baby boomer generation is retiring, they're now selling their business to their workers. And there's a real growth. There's an organization called Working World that is going around and helping workers conduct leveraged buyouts of the enterprises they've worked in, and over time that becomes a worker-owned enterprise. I think the B Corp movement has done some of this work for some models. I mean, B Corps don't always go to this level of prioritizing the social impact, but it does start getting to at least the heart of the mainstream model and those B Corps, I think, have spread across some of the mainstream models. But I think the most interesting place to look is that the average company isn't going to live for more than 10 or 13 years. There's different studies I've seen on this. So new companies are being created all the time. And those new companies rise very quickly in some of these newer sectors. So how can we get those higher growth sectors to embody these social enterprise models rather than going around trying to transform, 30, 40, 50-year-old companies into mission-led models? Can we see an uptake of social enterprise, social mission-driven, cooperative, other sorts of social economy enterprise models in those new sectors? And I think communities can play a huge role there. Governments can play a huge role there. We're all citizens. We can be a voice in our democracies to push for those policies that try to put that vision into practice. We can invest our money in a way that facilitates that sort of that sort of transformation as well. But I mean, wouldn't it have been wonderful if the Googles and Facebooks of this world 20 years ago were born as mission-led models, and we would have had more Wikipedias than maybe Facebook's. Wikipedia made a very deliberate decision very early on to stay mission-led, and it's been a huge success. But it doesn't exist to maximize profits or extract value for shareholders. It exists to play a very particular social role in the global information economy. So those models are possible. It just takes a bit of imagination.
And I suppose one of the challenges there as well is that issue of investment. So for those high growth sectors, and whether it's in the tech sector or disruptive models of new businesses, those that we see that seem to come out of the blue very quickly have had huge investments. Usually that's how businesses grow very rapidly, and I think that's certainly one of the challenges that we'll be talking about throughout this summit, but seems to be one of the challenges currently in terms of matching that investment with social enterprises who want to start and grow quickly and have a business model, but just can't get that initial investment because the risk is different, isn't it? It's just a different type of risk.
Well, I mean, if you break down, I think, the finance into debt and equity, it becomes a different story for both. So, a social enterprise can borrow, if it has assets, it can borrow on the same sort of debt markets that a standard business can. But debt finance can be punishing. It's not patient. It requires a percentage every year for you to pay your interest rate and then some. So it's very difficult to grow purely on debt finance. On the equity side, it's very difficult to make the claim that you should invest your equity investment with us, and then we're not going to make this all about you as the equity investor. That's essentially what social enterprises say. If it doesn't say that, then I would say it's not a social enterprise. If it says we are here to serve you and we are here to maximize returns to you, then it's just a normal standard business, and it gets us in the same issues of inequality and other things that I think mainstream businesses have got us into. But the minute it starts saying, you're one of the stakeholders around the table, you're important, and you will get some return, but we might not always maximize the return to you, Mr. or Mrs. Equity Investor. It puts you in a disadvantageous position. So there, I think we need more creative government models. It could be credit guarantee facilities that allow social enterprises to borrow money at lower rates. It could be other forms of packaging up equity or guaranteeing equity sort of insurance or other things that allow social enterprises to access impact investing or other sort of models of equity finance. I think those models exist. There just needs to be a realization that this isn't a nice to have anymore. We need businesses who serve their communities and are commercially viable, to become the mainstream model. And if that is the vision, then a lot of things are possible.
Yeah, and I totally agree. And I think it sounds like that it's more and more about those individual investors, and all of us as consumers and citizens can choose, like you said, how to invest our money as well. And there's more opportunities for us to do that in different ways, even in very small amounts collectively, and that can make a difference. But it does sound like it needs that worldview perspective shift, that actually investment shouldn't just be about how much more you can get back, because that doesn't really sit aligned with everything that you've been saying anyway. That if you believe in social enterprises, you understand the challenges that you've laid out. If you're an investor able to invest in those high growth sectors, or even in any startup, you probably are already aligned with the idea that actually you're not investing to see big returns, but there probably just needs to be a much bigger shift amongst investors to do that.
That's right. Yeah.
What you were saying about sort of one of the challenges is actually in terms of, and I wonder, I haven't thought of this, but whether it's the legal structures that exist around businesses, and even just the governing documents that businesses have in terms of their requirements to maximize profit for shareholders. I know B Corp looks at that a little bit in the States and is kind of looking at challenging that, but is that another area that should be looked and focused at in terms of thinking about how we are more creative with what business needs in the future?
Yeah, I think we need to, we as a social enterprise movement need to paint the picture that we are the creative, diverse ones here. We're the ones saying that we shouldn't have a singular model where it's only about one stakeholder and it's only about one goal. We are saying there needs to be a balance and a spectrum, and we can look in very different ways. So we're sort of the let 1,000 flowers bloom crowd here in that spectrum, whereas we're seeing a very limited, singular, focused model that we're trying to disrupt by saying we can have much more. That can still be a part of the mix, but we need rapid growth of the range of diverse alternatives that we are starting to see. So I think that's a huge part of it. I think in different jurisdictions, the issue is different. I mean, some of our members are private enterprises, but then that's only for legal reasons. And then you look at their board, it's dominated by producer groups or by local community representatives, or they find ways of getting admission into legal documents. I mean, the legal challenges aren't insurmountable. I think it does clearly help to have a social enterprise legal form in some places. But in others, if there's a will of saying we want to structure this thing, we don't want to concentrate power in the hands of one particular stakeholder group, and we don't want to allow a singular priority to run every commercial decision we make. As long as that's the will, I think you can get to very creative structural solutions out there that we're starting to see blossom all around the world.
Mm-hmm. Brilliant. And then one question I wanted to come to is you were saying, I think you gave an example as well, that one business that you're familiar with has changed the salary rate so that it's more a 5-to-1 ratio.
Yep.
And obviously fair trade and kind of the living wage movement and ensuring that workers are paid fair and decent wages for where they live and what they're doing is thankfully grown rapidly over the last decade or so, and is continuing to grow because it's not happening fast enough in my mind and needs to happen more. But I was wondering whether across the organisations that you work with and what you know globally, whether there is a good balance ratio of the highest paid to the lowest paid. And I know lots of corporates have been looking at this anyway, regardless of whether they're social enterprises, because publicly it doesn't look very good when you have huge wealth differentials between the highest and lowest paid. But for any social enterprise that's sort of starting out or looking to kind of improve this, is 5-to-1 a good one? I mean, are there any kind of suggestions of what is good? I mean, I've certainly come across organisations that try and have a completely flat structure. But I think if you grow and you're a big organisation, that's more and more challenging. Yeah,
and I've come across organizations where the boss isn't the one that gets paid the most as well. There's one business I know of where the marketing manager is paid more than the CEO because of just they needed to get someone in of a particular skill set to make it work. It's hard to give a specific number. 5-to-1, I think, is a for most contexts, it's a very egalitarian model, especially if you compare it to mainstream business, which can be in the thousands to one, not even in the dozens, but in the thousands to one. The only watch out I have with that issue is that the businesses can often outsource some of the lowest paid parts of their economic activity. So, and then those ratios hide the huge gross inequalities. So you might look at a bank and say, wow, very flat structure from top to bottom, the median salary is high, etc. But they don't, they contract out their cleaning, they contract out their drivers, they'll contract out sometimes even that, secretarial or administrative staff and pay, outsource all of that to a separate firm. So they're just paying a fee, and the salaries they don't get involved in. It's a real trend that some of the more profitable companies, particularly in the services sector, tend to outsource their highest, their lowest paid individuals, and so that's why the figure or the ratio itself is not a magic bullet. It's more important that that there is a voice and a representation of people who otherwise wouldn't have a voice. Mm-hmm. So it might be, the cleaners, or it might be the production staff in the supply chain, but finding a way to give them a voice into the structures of the business is probably even more important than having a specific number or ratio to govern that, because that could be a fig leaf at times that hides. And I know the social enterprise sector isn't one that would be doing that deliberately, but yeah, people can game the system in different ways when it comes to a single ratio to represent it. But they can't game the things that you're seeing on the board here, if my screen is still being shared, which is you can't game the way your board looks. You can't game the way your profit distribution model looks. You can't change your governing documents to greenwash yourself. If you're really putting a mission of your priority, you can't game your ownership model. These are things that these are the four features of, I think, social enterprises that can't be imitated in a sinister way by others. You can't make those things happen unless you're genuine about it. If you're changing who sits on your board, that's a big decision. I mean, companies around the world are fighting very hard to make sure worker representation doesn't happen on their boards. Putting a limit on profit extraction, that really changes who you are in the DNA. Changing your legal documents really changes who you are. The ownership, who owns you, really changes who you are. So this is why really getting to the heart of the DNA of a business is where I think the social enterprise sector can be very authentic. Mm-hmm. And things like ratios, others can game in different ways without substantively changing anything.
Yeah, no, and I think this model is really, really helpful. It certainly challenges me in thinking about my own social enterprise, the social enterprise that I'm involved in, and I'm sure will challenge other people who have their own social enterprises to think in a slightly different way about what social enterprise is or could be, in its much more holistic way about that wider social mission and what you're actually trying to achieve. So I really, really welcome, and hopefully if you're happy we can share that.
Yeah, happy to.
Slides after this as well. There was one question from the audience. If anybody else has got any other questions, please do post them now. But a very straightforward question is, how does a social enterprise join the World Fair Trade Organization, and what are the benefits of doing so?
That's a great question. Well, there's a system that they go through. So WFTO.com is our website, and they can, by applying to join, they go through a self-assessment process. Then they are peer reviewed by another member of the WFTO or fair trade community in their country. And then they are externally audited every 4 years on that model. And it looks at the three aspects I mentioned in that triangle. So the human rights and social conditions, the trading practices, and then the mission and structure. The benefits are, I mean, it's a global community of social enterprises that really put the mission at the center of what they do. And there's a label that they own. So we are a one member, one vote membership organization. So our biggest members, like Dr. Bronner's that we talked about earlier, have the same voice as a very, very small enterprise in Ghana or Sierra Leone or Guatemala. And they own the label. So once they are verified as a social enterprise and their systems are verified, then the product label of Guaranteed Fair Trade can go on their products. And they also get to collaborate with each other. A lot of the businesses in our membership network try to do business with each other because they know that they share a common set of values and they exist with a common mission of trying to do good for farmers, workers, artisans around the world. And now businesses can join who are predominantly manufacturing products or are sourcing products from northern countries as well as south. Historically, the movement has been about production in the south, consumption in the north. We changed that late last year, recognizing that inequality and entrenched poverty is a problem, marginalization is a problem everywhere, regardless of where you are. So any business that is focused on the interests of the people who are marginalized, who are producing products, no matter where they are, they can now be part of that community. So it's a growing community. We're growing in our numbers, and the sales are growing in total as well. And they try to support each other and message to consumers about who they are and their mission.
Fantastic. Well, hopefully that's definitely answered the question. Sophie's also said, is there a set of criteria for WFTO members that you can share?
Yes, I can share that. There's a standard. So there's 10 principles of fair trade, which looks across those three areas of mission, trading practices, and social and human rights conditions. So those three are manifested through the 10 principles of fair trade. But there's a standard that is applied, which I can paste into the chat box as well. Okay.
Thank you. And there is also one question. They do say that they've only just joined later on in the presentation, but I don't think this has been covered. But I'm assuming that it's not just about products. Do you have organisations that also sell services as well? Do you have models like that?
At the moment, it's about product. We're looking into services, but we would need to develop a new standard for that. But at the moment, yeah, it's about product. But yeah, some of the companies don't produce directly; they buy from others who produce. But, yeah.
Okay, so I just have two other questions, and then we'll finish off. I think one is about the environment and environmental sustainability. Now, I'm sure that comes into an element, and even if not part of the standard, is obviously one of the outcomes that happen.
It is part of the standard. Okay, so it's the environment. It's the 10th principle.
Brilliant. Because for me, that's like one of the, it's a key sustainable development goal, and it's also just a key thing that, social enterprises shouldn't just be focused on the social mission. We should be doing this as well to sustain the planet and sustaining local resources, ensuring that communities have access to basic things like water and food. And I'm just, interested to know, so I don't know if you can expand on that 10th principle or examples of social enterprises that have that much more, I suppose, at the forefront of their social mission as well.
Yeah, it's what's been really surprising with me is that I came into this movement 8 months ago now, and I came into a leadership role, but I came from outside the fair trade movement, and a lot of the communications and the focus was on producers and social issues for particularly more marginalized farmers, workers, artisans, etc. around the world. But when we scratched at that, what we found is that once you focus on a mission as a business, you end up having all these other things that you do that you don't even realize are special. So some of our members, for instance, I'll give you an example from Bangladesh. We've got more than a dozen members in Bangladesh producing all sorts of products that are sold around the world. One of the members is collecting waste from the fast fashion factories in Dhaka and turning that into various products. So it takes it back into some of the poorer parts of Dhaka, and then its collection of producers takes those materials, turns them into bags, turns them into other products. So that enterprise is called Tarango, for instance. But when I discovered them, I thought, wow, this is a phenomenal story. It's circular economy along with social enterprise, along with fair trade, and I started realizing nearly every member does something to that effect. So a huge proportion are doing upcycling. There's a huge proportion that are using, the vast majority of those involved in food products are using organic farming, not because they have to, but because they recognize that whether it's eliminating waste or farming in an organic way or reducing their carbon footprint, ultimately that impacts social issues as well. The people that are most disproportionately impacted by environmental crises are the poorest people. So if your mission is to benefit those communities and those people, then you can't, on one hand, improve their livelihoods, and on the other hand, damage the environment. That's going to then cause other social issues for them in the long run. So a lot of them are recognizing this and are bringing that into product design, into their production facilities, into other priorities and policies that they're coming up with, which has been a really pleasant surprise to me and made me realize how interconnected those issues are. And the women's empowerment part as well. I mean, women's empowerment is a part of the fair trade story and the fair trade social enterprise movement, but there isn't a requirement that the majority of CEOs have to be women. It's just that when you have a mission at the core of who you are, that becomes one of the outcomes. You end up with women leading enterprises. You end up with having more upcycling and circular economy. You end up with a disproportionate amount of organic farming as a part of your supply chain model, because you're focusing on the goal of the social mission.
Brilliant. No, that's really, really great to hear. And absolutely 100% agree. So then the final question I've got, which I'm asking everybody on the summit, Erinch, is, why is it you're passionate about social entrepreneurship? What excites you about the future? And I suppose, having listened about some very negative statistics in your presentation, but I really welcome them, what hope have we got for the future?
Well, I think what we're doing is we're experimenting with the businesses of the new economy. I think there is going to have to be an economic transformation. We as a planet and society are living beyond the boundaries of our planet. Like we're using natural resources in an unsustainable way, and yet we are under delivering on social outcomes. We still have more than 800 million people who are going to bed hungry. We've got this increasing inequality. We've got increasing environmental disasters around the world. So there's something that is broken, and we need to change the way the economy functions. And I think I'm certain that the experimentation that's going on in the social enterprise movement, including in our community of social enterprises, is pioneering what the future will look like. I think we will have to, at some point, realize that we need to completely shift the models of business, the models of trade, that are causing some of these social and environmental issues. So I see great hope that all of these models that we're talking about, people participating in your virtual conference, other conferences I go to, other movements that are part of the same vision, they're doing this despite an ecosystem that doesn't foster them. That is despite an ecosystem that makes it hard for them to raise finance, despite an ecosystem that, with accounting rules that aren't made for them, for their businesses. And, it's with business schools that aren't really raising managers that are geared to think. It's happening despite a system that is trying to pull in the wrong direction. Imagine if we start to re-navigate that system towards, that whole ecosystem towards having social enterprises at the core of the global economy. I think that there'd be a rapid explosion of social enterprise and other mission-led and sustainable models of business. And that feels like that's around the corner. So I'm hopeful. I mean, I'm a kid from a poor family in Turkey, so I'm hopeful with what the future holds. But I think that it's getting urgent now, and we need to really raise our voice as a movement to say, this works. Let's get the ecosystem now to foster a rapid uptake.
Yeah, no, totally agree. And I definitely think there's that urgency, but there is that optimism. And I know so many, the whole movement is trying hard to make that shift. And I think what's really exciting, particularly from listening to you today, is about that need, and I think there's definitely been a shift away from this. It's not so much about what singular model replaces the old one, but what diversity can we create to help, society, individuals, communities, the environment, and our economy for a sustainable future that doesn't have to just be one model. That it's almost pointless kind of, we're so at the early stages of kind of transforming the old model. Let's not worry about trying to replicate it by having a singular model. Let's welcome and encourage more of that diversity, which always makes sense. So thank you so much, Erinch.
Thank you. And I've pasted into the chat box the link to our standard as well.
Brilliant. And I'll make sure we share that in the follow-up email as well. So thank you again for your time. It's been absolutely fabulous to learn more about the World Fair Trade Organization, but also all your knowledge and expertise. And thanks again for inspiring the whole summit. It's been brilliant.
Fantastic,
And
thank
if we've
you.
got any other questions, I'll forward those on to you. And if you don't mind, that'd be great to have some feedback, because there may be people watching on the replay. But for everybody else that's watching, thank you very much for joining us live, and we'll catch you tomorrow. So thanks,
Thanks,
Erinch.
guys. Take care. Bye-bye.
Bye-bye.